Monitor has just finished its independent review of the property market for the last month of the year. What does it tell us? We are very pleased to be joined by the Chief Operating Officer, Zhann Jochinke. Nice to see you. Good morning.
Morning. Happy Monday.
Happy Monday. Is it though? Your report is titled From Acceleration to Absorption. You note that we've got the second month of price easing in a row, and yet that second month is the strongest December on record, and it follows the strongest November on record. How are both those things true at the same time?
So we're looking at two different dynamics, right? Price growth and then transaction volume. So prices have started to taper off a little bit. I'm not using decline, even though there has been consecutive months of marginal negative decline. We're talking 0.2, 0.4% coming down, and a little bit softer the month previous. It's the first negative quarter we've seen, but again, marginal. So I'm not saying that Dubai has pushed the brakes, but they've maybe taken their foot off the accelerator right now as we go in. But what we're still seeing is record participation, right? Liquidity is there. Transaction volumes are still high. As you mentioned, every month last year, with the exception of one, was a record transaction month. So we've got that demand that's coming in there, but now we're just starting to see prices across the market broadly taper off. What it might mean in the coming months, we could see further tapering, we could see some ups and downs, but we're likely to see a market that starts to mature more in that price appreciation, less aggressive than previous months, and maybe some stability going forward.
Okay. Let's talk semantics. You're being very careful in your language. Tapering off, not calling it a this, calling it a that. Is this a cool down? Is everyone... are we being very careful about... Tell me why we're being very careful about the language we use here.
So cooling is a good word. I don't like the words crash, bubble, burst unless we start to really see those, or a correction, because that implies something was wrong. But cooling is definitely a better word, and we need to see some. We've had 5 years of progressive growth. Market cycles are cyclical. They're cycles. They go up, they go down. Different things cause them to go over that tipping point and also into the recovery point. So we've seen that growth. What we're also seeing is a lot of new inventory come to market. So in that headline that you mentioned, now we're going to start looking more strongly at absorption and what that means for the market. So the good news again, participation transaction volumes are high. If we see those high whilst prices decline a little bit, they start to cool off, not necessarily a bad thing. That might actually drive further participation in the market. You've
said that it's potentially a sign that the market's maturing. We are hearing the M word over and over. What does that actually mean?
I think Dubai is a very short-lived market. We're 20 or so years old. We've gone through some cycles where it was very boom and bust in the past market cycles, rapid appreciation, and then these really strong periods of correction, if you want to use it then. We're not going to see that as much now because the fabric of Dubai has changed. Population is higher. It's less transient now. People are calling this home. There's a lot of government initiatives to keep that going. Not to say that there's not speculation in there, but it's not as rampant as it was before from looking at the data. There's definitely still some there. But again, I think one of the biggest things to look at is we might be repeating what we've done in the past where we bring a lot of things in, and the biggest thing that tips markets over is hypersupply or excess supply.
And that is one of the questions I think that your report really raises. We've seen more new projects launched than ever before 2025. You've got the numbers on that in terms of one launching every 4.5 minutes. What is it?
So we're looking at about every 13.5 hours last year, there was a project launch. What's interesting is, so we had about 168, 170,000 new residential units launched in that period, and they're going to be delivered over the coming years, say next 2 to 5 years. That's significantly up on previous years. The number of active developers in the market is up 40%. New developers that hadn't been building in Dubai the year before.
Is there a concern with that?
Always concerns with a new developer, no track record. When you look at some of the mainstays here, your tier ones, your EMA, your Dubai holding group ones, there's a long track record where you can gauge their performance, and there's relative safety when you can look at history. The newer developers, you don't know the relative unknowns. They typically offer different payment plans and other things in there. DLD some mitigation risk as well, with more in escrow accounts and more security deposits and those sort of things. But there is that unknown. Whether they're going to be able to maintain their pipeline and actually get things delivered on time is going to be a question for everyone. There's going to be pressures on bringing things to market anywhere close to handover dates for some developers there, and it comes down to lack of contractors to actually bring these through. Newer developers, not necessarily too concerned about them, but it does. Your due diligence should be a little bit more higher on those when there's more unknowns.
Okay, so from acceleration to absorption, 167,000 new units. Can the market absorb that?
It's going to face some challenges likely. If we look at just the last 2 months alone, there are almost 32,000 new residential units just in the last 2 months. Damac Islands 2 was a huge contributor to that, and most of those sold out. So instant absorption because it was the right product coming in. So now it's going to be more about the product mix coming in and what the market wants versus specific pockets over Dubai that might have high concentration of a specific product and unit type that's going to have more struggles with absorption.
Okay. What happens in 2026? Can we sustain that launch pace? Would we even want to?
I think we will likely sustain it at high levels. There might be a little bit of tapering off on it, but looking forward at what we know is already in the planning phases, you're probably going to see pretty high launches, one a day. Maybe we get to that 13 and a half hours again. Can it keep going? The numbers right now, it's selling, but now it's looking at buyers. What's really going to change is buyer behavior this year. There are a lot more options. There's going to be less pressure. So buyers will have options to look at. They'll be able to weigh things up, and certain projects will move quicker than others. Looking at absorption rates at a more granular level, let's say a specific developer would reach, say, a 90% absorption within a month. If we see that start to taper down, and we are, it's fine, as long as it settles somewhere. Let's say it settles now instead of a month to 2 months or 3 months, fine. We start to see that settle. But if it continually goes down, that's one of the big stresses and one of the bigger causes for concern about the absorption of supply overall.
30 seconds left with you. What does that mean for prices in 2026?
Prices in general depends on the market. Two different markets, off-plan and completed. In the completed market, we've seen some areas, single-family villa and townhouses, start to find their plateau or their new norm unless big renovations are done. Apartments likely to see some downward pressures. The off-plan market, I think you're going to start to see uber competitive coming in with launch prices as there's so much option available. It's basic supply and demand. Too much supply, too much of the same thing, downwards pressure on pricing.
Zhann Jochinke, Chief Operating Officer at Property Monitor. Thank you very much for your time this morning.
Always a pleasure.